Get ready for more valuable financial insights from Northern California's premier retirement income planners, Dan Ahmad and Jim Files, owners of Peak Financial Freedom Group. For more information, go to peakfin.com. And now, here's Dan and Jim.
This is Dan Ahmad with my partner Jim Files. We'd like to welcome you to the Peak Financial Freedom Hour. We'd like to thank everyone who's listening right now to try to gain some knowledge about making the right decisions with their money now that they're getting ready to retire or they've retired. And we'd like to put a shout out to all of our listeners that have listened for weeks, months, even years, even decades to what we talk about to try to help you feel more comfortable about making those decisions, because those decisions we want to help you make, hopefully, start to reduce some of the uncertainty in your finances, because uncertainty is what causes us to worry. And we know most of you listening, unless you're our clients already, you worry significantly about your money. And if you ask Jim and I, what do we really do? Our number one goal, our mission is to help people that are retired or getting ready to retire stop worrying about their money so much. We can't eliminate worries, but we can definitely help them stop worrying. So we'd like to, again, thank you for listening. Hopefully you've gained information from us over the years. And we want to make sure also you know that you can call in on your cell phone to pound 250 and say the keyword money, pound 250, say the keyword money. You can also call our office off our website or go to our website at peakfin.com. And if you have questions, we can try to answer those for you. And a lot of you at some point decide you need help. You want a plan. You want answers. You want a second opinion. You want to find out where you're at. You want to see if you can put a plan together that'll reduce your worries and guarantee you're not going to suffer large losses, and guarantee you're not going to run out of money. Feel free. We'll be glad to help you with that. As well, if you'd like to receive books, you can go to our website. You can download our most recent best-selling Amazon book, and that is Mama's Secret Recipe for Retirement Success. And you can also call us, and we can give you what I think is our best work to date, and that is called The Golden Promise, a very short 80-page book that explains how and what you need to do to create a written retirement plan so everything about your money is in writing. And Jim, one of the things maybe you can talk about real quick is the opportunity for them to get a free dinner seminar.
You know, we do free workshops around the Sacramento marketplace at great restaurants. We do them regularly, and we do them so that we can educate people without you having to come into our office, right? We can educate you on what we do and what you need to do to have a successful retirement. So if you're interested, and some people say, you know, I want to come in the office, I want to meet with you right now, and that's wonderful. Other people say, you know, I'm not sure. It sounds good on the radio, but maybe I need to take just a little, a slighter step forward. And if you're that type of person, you can call our office. We can schedule you for an upcoming dinner restaurant reservation for you and your spouse. It's about an hour presentation that we do at a great restaurant. You can learn deeper about what we do. We show a PowerPoint with lots of slides and colorful pictures, so it really makes it easy for you to understand and allows you to take that another step forward without making a full commitment to come in our office. And then you can decide, does it make sense to make a meeting in our office, or you may not. But
and a lot of people, it's funny because there's one of the spouses that takes care of the money and the other spouse might take care of the budget. So someone does the investment, someone does the budget. So let's say the wife does the budget at home, monthly bills, etc., and the husband takes care of the investments. What happens is the husband typically thinks there's no way the wife's going to understand what we talk about. We will guarantee the wife will understand as much as the husband understands what we're talking about at the workshops and as we're doing the planning, because we talk at a level so both spouses understand what you both need to. At retirement or getting ready to retire, you both better understand the money equally, because one of you is going to be gone at some point, and the survivor better have the equal amount of knowledge. So Jim, why don't you lead us off with some financial wisdom, a quote of the week for us?
This comes from Jimmy Dean. We have such good quotes from some of these older folks. A lot of them aren't around any longer.
Jimmy Dean, you mean sausage guy?
He said, Jimmy Dean, baby. He said, I can't change the direction of the wind, but I can adjust my sails to always reach my destination. And again, it's another quote that just kind of dovetails into exactly what we do and exactly what you need to do as a pre-retired person or retired person, is that you can't change that direction of the wind. In other words, we can't change what's happened in the Middle East. We cannot change what's happening in Ukraine. We cannot change the government. We cannot change the politicians. We cannot change the rate of inflation. We can't change any of this stuff, but we surely can change the direction of our sails, right? How do we adjust our sales so that we can navigate through all of these issues that are confronting us today, that will always confront us? And there's going to be more issues with artificial intelligence, with people getting access to these tools. We have to make sure that our financial portfolio, our future is set up so that we can actually move around these, navigate it, so they don't become a roadblock for us, Dan.
Well, I think what you talked about is key, and it actually opens up a big canyon of problems. And with adjusting our sales, that's key. But we have to go one step back. Every time we talk about something in finances, it's almost like you have to go one or two steps back to make sure things are going to happen right. So adjusting the sales right now to make sure we reach your destination. Right now, that's not really, I think, the most important question. I think the most important question is, right now, are you pointed towards the right direction at this point in your life? Or are you pointed at a direction that you should be pointed if you're younger? So if you're 40 years old, should you point what your goals are the same as if you're 65 right now? And the answer is 100% no, you better not be. Unless you get lucky, things aren't going to work. So when you were young, you were pointing, and you would adjust your sales on trying to get the highest rate of return, regardless of how much risk you took. You kept investing no matter what happened in the markets, up and down. You didn't watch it. You didn't care about big losses because you knew you had time on your side, and you didn't need the assets for income. So to adjust your sales in that scenario will be a little different. What if you're 60 right now and either retired or getting ready to retire? Can you now have your boat pointed at that exact same destination? And the answer is no. You got to completely revise it into what?
You got to revise it into what you've saved for 40 years now has to be protected for the next 20 to 40 years, right? And you're going to use income off those assets. So you better adjust those sales. You better have a different direction. You better be pointed in the right direction. And again, Dan, people don't understand this because if they go to the internet, they listen to podcasts, they all say the same thing. Stay the course, no matter what happens, stay in it, you'll be fine. But what they're talking about is if you live forever. For example, if you were a pension fund, that is exactly right. They don't have to adjust those portfolios long-term because people are going to continue to die over time, but the pension fund stays there basically for eternity. So it's okay to do that. But when you are 65 or 70, you do have a life expectancy. You are going to pass away, and you have 15, 20, 25, maybe 30 years left. You better make sure your sales are positioned correctly because you are not a pension fund. You cannot survive big downdraws, downfalls in the market and expect to have income for life. You can't, Dan. It doesn't work that way.
No, and I think a lot of people intuitively listening right now know this. They feel it in their gut. They know once they get close to retirement or then retirement, they should be doing something different because we all realize we have less time on our side. We also realize we're not getting paid our paychecks anymore. We realize we need to use our assets for income, and we realize we're not investing money. So all those things should, if it doesn't, then you better start making them make you understand what's the most important thing to worry about with your money. It's those things. And if we can now plan for those things, we can put you in a position where you have a higher probability of success, which will help you stop worrying. Because just think about it. It doesn't matter. Again, you hear so many dumb things about your money. And think about it. Can you, at this point in your life, if you're retired or soon to be retired, if you're younger, don't listen. If you're retired or soon to be retired, can you right now, is there any way possible you can suffer a big loss like 2001 and 2 or 2007, 8, 9, and have a high probability that your money is going to last for as long as you live from this point forward? The answer is a big, huge no. Secondly, right now, the way your assets are invested, especially if it's in volatile assets, stock market, etc., can you, number one, take a high level of income off of it and guarantee that you're not going to run out? And the answer is another big, huge no. And the next question with that will be, can you make sure even if one of you lives past 100, that your income isn't going to stop or decrease? And the answer right now is a big no. Can anyone live comfortably, Jim, with those three big no answers?
No, they can't, But, markets turn sometimes very quickly. And sometimes it takes years and years and years for them to go down. And people always think they're going to bounce back. I'll take you back to 1999. And let's say you're 60 now. You were back, you were 35 then, right? You probably don't even remember
a
that.
Youngster.
Yeah, it was a long time ago, right? But in 1999, the market was just cranking, right? 97, 98, 99. The NASDAQ was up. Nobody thought the market could
in
ever drop.
99, I think the S&P went up 20%
Yeah,
that year.
yeah, exactly. Nobody thought the market could drop. Well, what happened in 2000? It dropped somewhat, and then it dropped again in 2001, and then it dropped again in 2002. And if you look backwards over that 3-year period, you were down 53% on the S&P. You were down 68% on the NASDAQ. Now, we'll put percentages into perspective.
And a lot of people do remember it. They don't want to remember
Yeah.
it, but we want you to remember how it felt.
Yeah. So imagine if you were retired and you lost 53% of your money. It changed your retirement. Now, to start all over again, 2003, 4, 5, 6, 7, what happened? The real estate market was in a boom cycle. Everybody was making money in real estate. It was unbelievable. The market could never go down again. And guess what happened? 2007, 8, and 2009, the market dropped 57%. You had $1 million, you're down to 430,000. Would have it changed your retirement? Of course it would have. Now let's fast forward to today. In the last 3 years, guess what? Artificial intelligence, boom, 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 double-digit rates of return, right? People said it's unthinkable for the market to drop. But guess what, folks? The market isn't going to give you a warning. It's going to do the same thing at some point in the future. You just have to be prepared for it so you don't lose half your money.
You're back with Dan Ahmed, Jim Files, the Peak Financial Freedom Hour. Thanks for joining us. And we're talking about a lot of data today. And I think we started with a financial quote about sales and making sure you are pointed in the right direction. You can adjust your sales to hopefully have the highest probability of attaining whatever your destination goals are for your retirement security. And we're going to then focus on what we know is the number one way to provide you the highest probability that your plan will work. And that is having something that none of you have right now, unless you're a client. None of you have right now what's considered a customized written retirement income plan. And we say this blatantly that none of you have this because in the last 60 years of our combined experience, we've met with over 4,000 people for second opinions, first meetings, just to find out if what we do fits and if they have issues that we can fix. And of the 4,000 plus people, only 3 of them had a customized written retirement income plan. So 3 out of 4,000, I'm going to round that down, Jim, to 0% of you have this. Because right now, if you think about it, is every single thing about your money in writing. And a lot of you will incorrectly state, oh yeah, I have a plan. Well, you think your portfolio is your plan. You think the statements you get every month or quarter are your plan. Well, that is your investment account. It could be even considered an investment plan, but it has nothing to do with having a customized written retirement income plan. And right now, your current advisor or yourself or your 401k company says, hey, here's your 401k plan. So you think you have a plan. You don't have a plan, Jim. All you do is have an asset. And those statements are just a report card on how that asset performed for the last month or 3 months.
You know, people, they're listening right now and say, well, what's a plan? You know, if you don't have a plan, I guess you probably say that, right? Because you've never been taught the importance of a plan. You've never seen our type of plan. You have no idea how this type of plan that we create for you is going to change your life. You have no idea how a plan that we design for you will lower your risk. It could even lower your fees, right? You will have no idea how this plan will set forth by month and year for the next 30 years, your income sources. Is that income going to go up, down? Will it go away? You have no idea how much after-tax income you need every month and every year for the next 30 years to meet your increasing budget every year. You have no idea how this plan can help you plan for long-term care expenses. You have no idea how a plan like this can plan for inflation and how that's going to impact your income. You have no idea how a plan like this will help you forecast if one of you passed before the other spouse, is the other surviving spouse going to have enough income and assets to maintain their life? And you have no idea how this plan can help you plan for your estate, for your grandkids, for your children, to make sure they have money for themselves. And if you don't have that in writing, I'm talking about everything that we're talking about is in writing for them, Dan, specifically in writing to manage through all these elements to make sure you become a smart and intelligent investor with your money before you make a financial mistake.
Well, because if you don't have those things, you're going to continue to worry about your money. So let's look at just a few of these concepts. Number one, a budget. That's the number one thing we're going to focus on because we are retirement risk mitigation and retirement income creation. That's what we do. That's what our firm does. Reduces risk of large losses, create income. Well, we can't create the income unless we know how much income to create, because that would be a bogus plan. So the way we know how much income you need is by creating a budget. And let's just say we know that a married couple typically is going to have a budget between $8,000 and $12,000. And let's just say the average is at $10,000. Yours could be more or less. We're just using averages right now. So boom, we know that the budget's $10,000. The big mistake that most people make, whether it's a consumer or whether it's a planner, is to create a plan that would give you $10,000 a month of net income after taxes. Because if you created that, you know now you can cover your budget. The problem is if your budget's $10,000 and you create a plan that only gives you $10,000 a month of net income, is that going to feel nice and loose and flexible, or is it going to feel completely tight and constricting? It's going to feel tight and constricting. So that's the worst way to create a plan. When we create a plan, if your budget's $10,000, we want you to have a minimum of $13,000, preferably $14,000 or $15,000 or more of net income. Because what if you have $15,000 in net income after taxes, Jim, and your budget's $10,000, and you have $5,000 more to spend each month than you need, as long as you're not going to be in a high tax bracket, and as long as your money's not going to run out? How's that going to make someone feel?
It's going to make you feel great if you can see that in writing. A lot of you, I don't know how much money you have. A lot of our clients have anywhere from $1.5 million to $5 million, some a little bit less, some more, but that's kind of the average client. And they would come in here, Dan, as you mentioned, they have a budget, let's say it's $10,000 a month. And they may have Social Security of maybe $6,000 a month. And let's say you have $1.5 million. And let's say you took off the safe withdrawal rate, which is 3% of income off your asset. If it's in stocks and bonds, that is the safe withdrawal rate. And that doesn't guarantee you won't run out of money. That just means it's safe for a number of years. Well, 3%, what's that? $45,000 a year.
$37.50 a month.
Okay, $37.50 a month on top of your $6,500. You're about 10 grand.
Yeah, 10 grand minus, but that's gross.
Be
minus
gross.
Taxes, you're probably down to $8,500.
$8,500, right? So then what do? You say, well, maybe I should take off 4% because somebody said I could take off 4%, not 3%. We can take off whatever you want, but the chances of you running into money increase significantly for every 0.5% you increase above that 3%. What if we could restructure your portfolio for the same amount of investment capital, $1.5 million, and what if we could get closer to 12 to 13 to 14, even maybe $14,500 a month, net after taxes 12? All of a sudden, the game changes, Dan. It changes significantly for the client.
Completely, because one thing that you haven't been taught before is the most important thing about retirement isn't just the income; it's the amount of net after tax, after budget income you have left at the end of the month. So let's say your budget is $10,000, and let's say we create $13,000 in net income after taxes. Take off your $10,000, and that means you have $3,000 of what we call net excess monthly cash flow. What can you do with that $3,000? Anything you want. You can spend it, you can save it, you can gift it. And we're not going to build a plan that's going to put you in a high tax bracket. And we're not going to put a plan that puts you in jeopardy of running out of money. So think about it. If we could build a plan like this, that we're talking about, giving you more net income that you need, as long as your income isn't going to run out for as long as you live, regardless of how long you live, and as long as you're not being a high tax bracket, why in the heck wouldn't you implement that? And you would. It's just no one has taught you how to do that, and that it can be something that will increase the probability of your happiness during retirement. Back with Dan Ahmed, Jim Files. Today we are talking about a customized written retirement income plan for your success. And we talk about this a lot, and we're probably the only firm you've ever heard talk about it, because we have not found one firm across the nation that puts together the type of customized written retirement income plan that we put in writing for you. And we do it so you can understand your money, and we do it so once you see it, we now take. The only way to take uncertainty out is to have it printed. You have it in your hand. You can read it. You can understand it. You see what's guaranteed. You see what taxes you're going to pay, all those things. So what is the customized plan? Well, we just talked about in our last segment, we think the number one most important thing, and that's your budget, because we have to know how much money you need each month, and we have to put a plan together that's going to exceed your budget. The second thing we focus on will be risk, because we feel, based on our data, our analysis, our research, our reviews, we feel that the most important thing to start with, other than the budget, is going to be to make sure we minimize risk. Because at your ages, if you're retired or getting ready to retire, one single large loss will almost guarantee that your plan will not work as planned, and it will guarantee that you have a high probability of running out of money. And we had to take into consideration, Jim, that every 5 years since 1929, the stock market has gone down an average of 39.5%. If that happens, people will not make it. So maybe give a little view of risk as far as how it is determined to then help our clients.
Well, first thing we have to do, if you come in to meet with us, we're going to ask you a couple questions. We're going to ask you, how much risk do you have in your portfolio? And guess what your answer is going to be? You're going to say, I don't know, or you're going to say, I don't think very much because that's what my advisor told us. Well, we're going to take your portfolio, we're going to break it apart, we're going to document it on a Excel format. We're going to send it off to several research companies we work with. They're going to come back with data to show you how much risk you actually have, not how much you think you have, not how much your broker said you might have. It's actual numbers. It's going to tell you based on what you own today. If we have another downturn in the market like we saw in 2007, 8, and 9, or 2001 and 2, it's going to show you how much you're going to lose based on how you position. Now, the good news is it's going to also tell you how much you're going to make in a good market, right? So we got both the good and the bad.
Well, how would that look? Because I just did this type of analysis for a client, and it showed in 2013, the stock market would have went up by 32%. The S&P would have went up by 32%. But their portfolio would have done well. With the way they're investing now, it would have made 30%. And they're really happy. They're like, hey, we're great investors. They go, you would have made 30%. The problem is in 2008, if the stock market dropped 53%, they would have lost 51%. So I asked them, okay, is making a 30% gain right now, and they were age 62, is making a 30% gain worth risking a 51% loss? And they said, no way, because if we lose 51%, we will never make it.
Well, that's not abnormal. That's probably 80% of the people that we see for the first time. They have no idea how they're positioned. They have no idea how much they could lose. And when we actually do this research for them, guess what? They say, wow, we had no idea. How do we fix that? You know, if you listen to our show, and we're pretty consistent, not pretty, I should say that we're very consistent on what we talk about. We're talking about risk. We're talking about budgets. We're talking about income plans, tax plans, legacy plans. If you have a current advisor or you go to the internet, do you hear the same type of conversation? The answer is no. You don't hear this conversation. You hear it from us because this is what we do.
Well, and what can we say? What can be proven incorrect? And the answer is nothing.
Nothing. Nothing can be
zero.
Nothing. Zero. I mean, if you're 40, don't listen to us. You know, we're not your type of planner. But if you're 60, 65, 70, 75, you better heed our advice. You don't have to use us, but you better heed the advice because, again, there are so many uncertainties in the world now. If you make a financial mistake, you're not going to likely recover, and it's going to change your retirement. So guess what? It's a wake-up call. You can change it. You don't have to come to us, but heed the data, heed the advice so you can take this advice and find somebody that does what we do, Dan.
Definitely. Well, how about number 3? So we talked about budget and risk. These are parts of a comprehensive, customized written retirement income plan. Number 3 are the fees, because no one comes in if they have an advisor knowing what their fees are, because no one has ever came in literally in our 60 years plus that had all their fees written down by their advisor, signed by their advisor, saying these are all the fees you see, and here's the hidden fees that you don't see. No one, literally 0%. So the first way to start controlling your fees is to understand what you're paying. So we'll do an analysis of what type of fees you're currently paying: advisory fees, mutual fund costs, trading costs, reporting costs, all those types of things. And then before anyone ever invests with us, we put in writing exactly what your fees are going to be, the fees you see and the fees you don't see. So now we have an apples to apples comparison, and you should never invest your money until you know what the fees are before you invest the money. So that we feel is mandatory. Number 4 will be the basis for the rest of the entire plan, and that's going to be your income analysis. And it's going to be something that you alluded to a little earlier, and that is we want to be able to prove to you where your paychecks are going to come from for the rest of your life in writing. Wouldn't that be cool to see where your paychecks, your income is going to come from? Because you have no idea right now. You don't know when to take them out. The income distributions, you don't know which accounts to take them out of. You have no idea how much tax you're going to pay. And worse, you have no idea how long the money is going to last. So what if we can create an income plan that's going to show each year where each income source is going to come from, and then the total income for the year, and show that your income is going to last for the next 30 years, just to be able to prove that everything is going to work out with your gross income before taxes. And we find that it's almost hard for people to believe because we show them that they're going to have significantly more income than they ever thought. And it's in writing, which makes it nice for them. The issue is that is going to be before taxes. So number 5, Jim, is going to be what I think probably is one of the most important things, and that's the tax scenario.
So, do you think it's important if you're getting close to retirement to know not only your gross income by income source? When I say income source, that means Social Security 1, Social Security 2. Maybe you have pension, maybe you have some rental income, you have an IRA, you have a 401k, you have a non-IRA, you have a brokerage account. We lay out this so that you can see the income by income source, but that's just half of it. The real powerful part is, Dan's an accredited tax advisor, right? He was an enrolled agent with the IRS for 30 years. We can provide tax advice, and that's rare with a financial firm. We can tell you how much after-tax income you're going to need, what your federal and state tax is going to be each year for the next 30 years based on current legislation, so that we can show you that you are going to be able to have enough money to get through retirement.
You're back with Dan Allman and Jim Files, the Peak Financial Freedom Hour. Thanks for staying with us. Hope you're learning a lot today. And if you have questions, make sure dial pound 250 on your cell phone, say the keyword money, call our office, or go to our website at peakfin.com. If you'd like to receive a copy of our most recent Amazon best-selling book, Mama's Secret Recipe for Retirement Success, you can do that on our website for free. It's a 500-page book, awesome information, and it teaches you what we think are the steps for you to succeed. You also can then call us and ask us for our most recent book, which is called The Golden Promise. It highlights in a very short, easy to read 80-page document exactly what you need to do to create a written retirement income plan, which is so important. And for those of you that like to learn more and really want to look at us face to face in the eyes, you can call us and we can then find out if we can get you set up to attend one of our free dinner seminars at some of the best restaurants locally. We go over all these topics with a bunch of PowerPoint, powerful slides to educate you on here's what you can do to put yourself in a better position. Again, there's no cost for that. So call. If you saved $1 million or more and you're 59 or older, you need answers and help, call. We can get you signed up for one of those workshops. Jim, we're talking about right now what we think, again, is the most important part of planning, and that is making sure your plan's in writing. And we always talk about how none of the people listening right now have a plan in writing, because we've met with over 4,000 people in our 60 years of combined experience, and only 3 people have had a written plan, which means if you round that down, it's 0%. And if you think about it right now, if you have a plan in writing that details everything about your money, not your statements, but everything about your money, versus not having a plan in writing, where do you think you have a higher probability of success? The answer is simple. If you have a plan in writing. The issue is you don't really focus on that much because no one else across the nation that we find is offering you a plan in writing. That's all we focus on. We will not take you on as a client without having a plan in writing, because everything about your money should only be dictated based on putting every single answer about your money in writing. One of the big things that people really freak out about, we already talked about the budget. We talked about risk. We talked about fees. We talked about being able to project out where your income is going to come from for the next 30 years. And we just were talking about last segment, taxes. Most people do not take out as much income as they can during retirement because they're worried about either losing money, risk, and running out, or more so, they're worried about paying a high level of taxes. Well, when you're working, if you made $200,000, you probably netted about 50% of that after 401k contributions, 457 contributions, retirement contributions, after paying money into Social Security, after federal and state taxes. So we assume we're going to continue to pay 50% taxes. What if we told you, based on, again, the benefit of us being able to do tax projections for you, what if we told you you can make $250,000 of gross income? The average couple in retirement, if they made $250,000 of gross income and their average total amount of deductions or taxes is going to be probably somewhere around 20%. Could be a teeny bit higher, could be a teeny bit lower, but what would you feel if you kept 80% of your money? And that's what's going to happen, because at retirement time, you're not putting money into your 401k, your 457 or 403b. You're taking money out. You're not putting money into Social Security. You're taking money out. You're not putting money into your retirement system. You're taking money out. All you're doing is paying federal and state tax, and your average tax rate is going to be somewhere between 15 and 25% for federal and state, which means your average tax bracket is going to be about 20%. So how would you feel if you get to keep 80%? You probably feel really good. The benefit is we're going to put that in writing, Jim.
Yeah, a lot of people are concerned about taxes. I mean, we're concerned about taxes. Nobody wants to pay taxes, but you have to look at taxes before retirement and taxes in retirement. And what Dan explained to you, that taxes in retirement, you're net after tax income is going to be less than what it would be, or your net after income is going to be more, more income when you are retired versus not retired if it's structured correctly. But if you think about taxes and you think about longevity, let's assume you're 65 and you live life expectancy 85. Hope you live a lot longer, but that's 20 years, right? Do you really want to focus on saying, I don't want to pay any taxes. I'm going to hoard my money. I'm not going to pay the government any taxes. You end up not doing the things you want to do. You're very frugal, which is fine, but you end up, not going to dinner with your grandkids and your kids because you don't want to spend the money. You don't go and take that extra vacation next year because you don't want to spend the money. You drive around in an older car because you don't want to spend that money.
But worse, you could end up paying more taxes with that mentality than if you simply started taking money out right now. Because if you don't take money out of your IRA, you're going to be forced to take it out with required minimum distributions, which start at 73 and they increase dramatically. You could be having to take minimum distributions of over 12% at some point in your life. And more so when you're gone, your beneficiaries, other than your spouse, your kids and grandkids, have to take the money out and pay tax on it rapidly over 10 years. So you cannot put yourself in that position. The number 6 thing, Jim, let's end with this, is legacy. We know every single person we talk to, they have this idea in their mind. They just haven't formalized it yet. Every single person we talk to, no matter how much money they saved, 1 million, 2 million, 5 million, $10 million, they saved a lot of money. They want to use their money and they think about their portfolio, but it's not just a portfolio. It's their portfolio. It's their IRAs. It's their bank money. It's their real estate. That's their total net worth. They've created a significant amount of net worth. Let's say it's $5 million of all assets. They want to use that net worth to create as much income as possible for as long as they live, as long as 2 things happen. 1, the income never runs out, and 2, they're not going to be in a high tax bracket. They want to have that $5 million in their minds. They don't want it ever to go down. Have you ever met one client really that says, I'm okay if I have no money left when I'm gone? Maybe like 1 out of 1,000, and they're kind of crazy. So everyone says they want their assets to stay level or grow. What if we can put a plan together, which is what we do, that will show you the $5 million of assets. We're going to take as much income as we can. You're not going to be in a high tax bracket. It's not going to run out. And these assets won't go down. They'll stay level or grow over time. So 30 years down the road, you can plan to leave $5 million or more to your beneficiaries, even though maybe you've taken $3 million of income out.
Well, that's what everybody wants. That everybody wants to start with a pile of assets, take a bunch of income out, not make a financial mistake, know they can't run out of money, and leave a bunch of money to the kids when they die. We all want that.
Call us on your cell phone, dial pound 250 and say the keyword money.
So, Dan, I thought it was a great show. Hopefully, everybody's learned a lot. The key here is education. If we can educate you correctly, you won't make a mistake. You'll have income for life. And again, if you like what we're talking about, call us. We can set up a meeting. We can set up a dinner reservation for you if you want to hear us at a workshop. There's lots of things we can do. We can send you our books. We can educate you so you'll do and have a great retirement.
For more information about Peak Financial Freedom Group or to schedule a consultation, just go to our website, peakfin.com. That's peakfin.com. And thanks for watching.